Hello and welcome to this YouTube channel for ACCA FR exam prep. My name is Eden. In this video, I'll be taking you through how to account for environmental or dismantling provision, which is a future cost to be incurred. So we have to look at how we account for the provision on this type of cost. Now let's look at the details. So this is a question I've extracted from a full single entity question. So from the trial balance Clarion year end 31st March 2015. I have environmental provision, so there is a note to it. The figure is 4 million. Now let's look at the note. Included in property, plant, and equipment are two major items of plant acquired on the 1st of April 2014. Item 1 had a cash cost of 14. However, the plant will cause environmental damage, which will have to be rectified when it is dismantled at the end of its 5-year life. The present value discounting at 8%. So it means that the present value of dismantling cost, the present value of the dismantling cost has been accounted for, and as at 1st of April is 4 million. The environmental provision has been correctly accounted for. However, no finance costs are yet been charged. So the impact on P&L has not been accounted for in the year. So just to throw more light on this, remember that the present value of these future costs is the future cost times discount factor. So if we know this amount times the discount factor of 8%, so assuming that this was 6 million times the discount factor of 8% for the number of years, this would give you the 4 million. So let's say that if the future cost were 6 million times 1 over 1.08 raised to power 5, that this becomes the discount factor. So this will give us, just to work that for you to see, so 1.08 raised to power 5, 1 divided by answer times 6. That will give you 4.1 million. So here we were already given the present value. This present value was given, so there is no need to discount. So if you discount the 4 million again, that will be wrong. So what is the impact of these on P&L? We have to find the finance cost. The finance cost here is the 4 million times 8%. And you have to know that from the date of the transaction to the year end, that is 12 months. So is 8%, so 4 times 0.08. That will give us 0.32 million. So that is 320 million. So the double entry would be to debit P&L as a charge 0.32 and will credit the provision 0.32 million. So this will be the needed adjustment. And in the question, we were told that the environmental provision had been correctly accounted for. However, no finance cost has yet been charged on the provision. So it's important you know how to account for this. So at the year end, the total provision, which will be in the financial position statement, will be 4 plus 0.32. And that will give you 4 That will give you 4.32 million. It increases the total provision at the year end. And that also means that the amount of asset, so the asset cost, I'm just expanding on the question. The asset value will be 14 plus the present value of provision. So the total cost of the asset will be 18 million, and the asset will be depreciated. So the depreciation, the related depreciation on this asset would have been 18 over 5 per annum. And let's see that 18 divided by 5 per annum, that would be 3.6 million. But from the requirement, we are interested in the finance cost, which has not been accounted for in the year. I hope this helps you in your preparation for the FR exam. Please subscribe to this channel to receive updates on new videos.